Thank God it's Friday, and just before you get into the weekend mood, let's do 55 minutes of current and relevant business conversations. You know you can only get it here on Business Morning on Channels Television. I'm Imi John Mekwa. We'll get right into it now, telling you what's going on with the global oil prices. Prices rose on Friday as concerns that a Russian ban on fuel exports could tighten global supply outweigh fears that further U.S. interest rate hikes could dent demand. But they were still headed for their first weekly loss in 4 weeks. Brent futures climbed 46 cents, that's about 0.5%, to $93.76 a barrel, while U.S. West Texas Intermediate crude futures gained 65 cents to $90.28 a barrel. Both benchmarks were on track for a small weekly drop after gaining more than 10% in the previous 3 weeks, amid concerns that tight global supply as the Organization of Petroleum Exporting Countries and its allies OPEC Plus maintain production cuts. Russia temporarily banned exports of gasoline and diesel to all countries outside a circle of 4 ex-Soviet states with immediate effect to stabilize the domestic fuel market, according to the government. The shortfall, which will force Russia's fuel buyers to shop elsewhere, caused heating oil futures to rise by nearly 5% on Thursday. The Bank of England mirrored the Fed and held interest rates on Thursday after a long run of hikes, but said it was not taking a recent inflation fall for granted. The European Central Bank Governing Council member said that the central bank will most likely keep interest rates stable at its next policy meeting. And talking about policy meeting back here in Nigeria, that was supposed to hold on Monday and Tuesday. However, the Central Bank's Monetary Policy Committee has deferred that date to a much awaited two-day decision that was earlier scheduled for the 25th and the 26th. In a statement released by its Corporate Communications Department, the financial markets regulator deferred the date of its 293rd meeting, scheduled for Monday and Tuesday next week. Although the CBN did not give reasons for the deferment, it said that a new date will be communicated to the financial markets in due course. The postponement comes after President Tinubu nominated Dr. Yemi Cardoso as the new CBN governor amid ongoing probe against suspended CBN governor Godwin Emefiele, and Dr. Cardoso awaits approval from the Senate. Still in Nigeria, the Standards Organization of Nigeria is asking Nigerians to discourage the use of non-energy friendly equipment, noting that the move would help reduce the costs consumers incur in powering the appliances in the country. The Director General, Standards Organization of Nigeria, Mr. Farouk Salim, who was represented by the Director Product Certification, shared this at the commissioning and launch of the AC Bioclimatic Testing Chamber, co-founded by the European Union, the GIZ in Lagos, and they said that the facility is coming at a time that the country is struggling with energy shortages, adding that SON is willing to support any initiative aimed at ensuring Nigeria promotes the use of sustainable energy efficiency systems. The director notes that SON will be making an announcement on importation of non-energy friendly equipment in the environment, giving a frame time for phasing out non-energy friendly equipment. There are market forces and trends determined by the World Trade Organization.
It is particularly also exciting that this specialized testing facility designed for evaluating the performance, energy efficiency, and durability of the conditioning unit will provide a more concert conformity assessment solution in this sector in Nigeria and across the West Africa. On behalf of the DG, I want to assure you that with this facility, and also within the shortest time, like the Director Lab promises, we will begin to see products coming to Nigeria or manufactured in Nigeria with the energy label put on it. I assure you of that. It's under my jurisdiction. So very soon you'll be seeing the energy level on this particular equipment, to assure you, because it's delayed due to certain factors, And also we want the consumers to be also fully involved in determining that what they buy is what they need to use and is fit for their purpose. This chamber will provide several significant opportunities in the area of energy efficiency, testing, climatic adaptation, durability and reliability testing, solar air conditioning, refrigerant efficiency, and standard development and training.
Well, the world is talking about climate change and clean energy. I guess Nigeria cannot be left out of that. We do know that the United Nations General Assembly is still on at New York, and like we always tell you, we have 4 of our strong correspondents right there. They've been sending in stories and interviews and all of that. Anne Waldo, Juliana Olainka, who has been appearing on Business Morning, Maria Bird, and Lanre Lasisi, who's going around with the president. Well, Anne Waldo had a sit down with the president of U.S. Africa Business Center, U.S. Chamber of Commerce, Mr. Scott Fishner, yesterday, and sent in this conversation. Of course, conversation is around relations between Nigeria and the United States. And so Anne started by asking about some of those pitfalls that have not allowed both countries to optimize the trade relations.
Bit of misunderstanding by the American private sector, primarily in the small and medium-sized enterprises outside of our nation's capital in large cities. We aren't well educated on African opportunities writ large as a society, as a business community. It takes a lot of effort. Unfortunately, what we see portrayed in the American media tends to be the wrong side of the story. It's the challenges. But where we sit at the U.S. Chamber, we see the opportunities, which was exemplified today by the conversation by His Excellency, the President of Nigeria, but also conversations we've had this week with presidents of Sierra Leone, of South Africa, engaging across a wide cross-section of the Nigerian and African community. Where we see opportunities is in the emerging markets. We know that there's always a role for those that are commodities-based, whether it's oil and gas or mining, but we see the opportunity really in creative industries, in technology, in this burgeoning youth population that's going to take over the continent in a blink of an eye. When Nigeria's population doubles the United States and exceeds it in the next couple of years, when the continent has, billions and millions of people, they're going to be youthful and they're going to be hungry for the next generation of business and investment. So where we see the opportunities is within homegrown technology, African solutions for global problems, but also we see the opportunity in value added on the continent. I think the era of take, grab, and return is over, and I think the era where American private sector is looking at is not take, but add to the story of the African development.
So let's talk about the Memorandum of Understanding with the African Continental Free Trade Area, which it would advance trade between the U.S. and, of course, African countries. How is that going at the moment?
It's going pretty well, right? The AFCFTA is evolutionary as much as it is revolutionary, and so we're working with Kelly Mene, the Secretary General, and his really, really talented team across sectoral approaches, looking at supply chain development and growth, looking at how do we enhance automotive and pharmaceutical industries through the supply chain, how do we do skills and technology development, how do we address the challenges of cross-border regulations that aren't always harmonized across countries. We know in certain sectors, mounds and piles of paperwork can add up to get a single product across a border. So how do we work with them to look at global best standards, to look at the environment that is that global companies are adhering to, and help them understand how Africans can adopt that? Because as soon as African-born solutions, as I like to them, are harmonized across all borders, then FDI flows are going to be much greater, and those opportunities are going to hopefully meet the capacity that the continent has. So getting the regulations right the first time around is going to set the stage for the future of the continent.
How do you advise people, operators and business owners, to actually go through or make the possible or easier for them when it comes to operating in that kind of environment?
I mean, the honest answer is it's difficult, right? The challenges of Forex and the fluidity of markets right now globally is a real big issue. We know inflation, pressures from the Fed that puts on African markets where commodities are traded is tough. And as we deal with liquidity issues in markets, companies need the assurances that they can easily invest and easily get their money out. And that's where this challenge of parallel markets comes in. Floating the Naira, I think, is a great step in the right direction. I applaud the president of Nigeria's decision to appoint a really talented banker to become the central bank governor. But we know these things don't happen overnight, right? We're not playing a video game that you can turn off and on in the same hour. We're playing a game of life, and people's lives are at stake here, and we need to make sure that all the assurances and trust in the system are built over a period of time. So I think the right moves of putting the right people in place that assure the system for a longevity standpoint, that the decisions we made in the trust of the people, is the right direction. I applaud the president for making that decision. If we could galvanize the 17 agencies that touch in some way African investment story, and we can convince investors that there is a backdrop of security given to them by the U.S. government, it's going to make a lot of new investors very happy. And I think that's where we see the leverage point to prosper Africa. It's not this venture into the continent. It should be a venture inward to enable small and medium-sized enterprises, diaspora, and minority-owned businesses to see the hope and the promise that we see at the U.S. Chamber for the continent.
If we talk about small businesses, especially in Nigeria, how do you think our government can accelerate process, especially for capital for small businesses, to help them grow?
I think tapping into the global markets, understanding some of the micro-lending that happens on a state level. We also know that across the continent, not much unlike in the rural sense of the United States, where there's a discrepancy against wealth in all sectors of our society. So understanding that Nigeria is an incredibly large country, that its economy is very diverse across very large swaths of land. And I think the promise that Nigeria has with the governors that are in place is bringing it down to a state and local level. All business is local. And so how do you look at what that sector in this part of the country is enabling? How can they grow, and how can they complement other industrial growth throughout the country, and then become part of a global supply chain is going to be key. You know, leveraging a very challenging financial services market right now is going to be problematic, but I think where we were today at NASDAQ, listening to the overtures that were being made, and recognizing the strength of the capital market formation system in Nigeria, which I think is one of the more robust ones on the continent, is going to be a way for companies to see, how do I grow, how do I list, and how do I get public capital and deal with the debt markets in a constructive way.
Do you see any sector particularly getting some kind of interest as for the U.S., or maybe a particular promising sector for U.S. investors to come into Africa to do business? Where do you see that sector being?
I come back to where I started. The enabling environment that I think many markets have created on the continent for youth and around technology, the sense that there are really, really profitable companies on the continent that can be the next unicorn. We heard that today when the Chamber announced Flutterwave as our new vice chair. Here's a company that 7 years ago, I believe, didn't exist, and today they're trying to figure out which market, and they have a decision to make. What market should they list in the United States? To be able to raise that kind of capital on publicly traded markets in the United States shows to the rest of the continent that Nigeria, the rest of the continent, is here ready to play in a global trading system. I think it's really exciting, and I think it shows a pathway for so many of these small businesses to grow and be hungry that their solutions are applicable to outside of their own countries. And so I think that's where we see the growth markets.
All right, so what's the current state of relations when it comes to the United States and Africa?
It's an important question. Last year, the Chamber partnered with the United States government as a co-host for the U.S.-Africa Leaders Summit and Business Forum. We have seen a really large outpouring of travel from the United States. In fact, our Deputy Secretary of Treasury just returned overnight to be at the event today with the President of Nigeria to tell the American private sector what he heard on the ground from Lagos, the vibrancy of the city. And I think that's incredibly positive, but I think we need to do more than that. When our government officials go in, we need to start leaning in with how our competition leans in, and that's the economics of engagement first. There are always going to be challenges around democracy, human rights, labor-related issues. Those are really, really important things. But our partners on the ground tell us time and time again that it's the economics that are going to set the other path straight. And so one thing that I'd like to leave with your listeners and your viewers and your own governments is press us to lead with economics. Our businesses are so hungry to be in Africa, and we just need that focal point of the U.S. government to say, we're leading with economics. Well, all of the other things will follow.
That was Ann Wardo speaking with the president, U.S. Africa Business Center, U.S. Chamber of Commerce, Mrs. Scott Fisner. It's not just Ann that's busy there. Maria Bird has also been very busy, and yesterday she spoke to some high-profile individuals who are also participating in UNGA. She sent in this report.
Business leaders from around the world gathered at NASDAQ in New York City to discuss U.S.-Nigeria business relations.
Thank you for what you're doing for Nigeria. On behalf of the Biden administration, I want to let you know that we want to be your partner in making the reforms that you are making in that country to unlock the potential of Nigeria.
We see Nigerians coming to the forefront of the American business community on a daily basis. It's truly exciting. It helps us understand your culture. It helps your culture understand ours.
President Tinubu gave clear indication that he is ready and open for relations with U.S. and Nigeria to grow even further, and that Nigeria is prime and ripe for business opportunities.
You, the private sector, you are the engine of growth. We can only depend on you. We can only give you the confidence necessary to build your trust in us. Let's partner. What you know of the Central Bank of Nigeria of day before yesterday is gone. It's a new beginning. It's a new dawn. For Nigeria, we are determined. We just don't want to go it alone.
Leaders and government officials from Nigeria and the U.S. discussed business relations. Nigeria Exchange CEO gave an impassioned speech about why it's important that the U.S. and Nigeria do business together, and specifically spoke on a partnership between Nigeria Exchange and NASDAQ.
I'm honored to address this esteemed gathering today representing the dynamic partnership between the United States and Nigeria. The address will seek to explore ways by which the Nigerian capital market can unlock increased prosperity for the Nigerian economy and maximize the return on capital for the investor community through government support and partnerships for growth.
The U.S.-Nigeria roundtable ignited much passion from both the U.S. and Nigeria, as discussions focused on being able to build partnerships and to increase business opportunities between the two countries. Also noting that trade is going to be key and important for both Nigeria and the U.S. From New York City, Maria Bird, Channel Television News.
You're welcome back. Well, the Digital Quality of Life Index is an annual study that ranks 121 countries by their digital well-being based on 5 core pillars. Nigeria's internet quality is just around the global average. The internet is highly unaffordable, according to that report, and compared to other countries, Nigeria lags behind. For the latest report, South Africa leads on the continent, being at the 72nd position. Kenya follows at 76. In fact, Kenya overtook Nigeria. Nigeria is now at 88th position globally. Now, this is Surfshark's 5th annual Digital Quality of Life Index, ranking Nigeria 88th in the world, dropping by 2 places from last year. Let's understand the implication of this ranking. Joining us for this virtually from Jos in Plateau State is Johnson P. Laka. He's a tech and media analyst. Good morning, Johnson. Thank you for your time.
Hey, good morning. Thank you for having me.
Yeah, so the report says Nigeria has dropped 2 places. Does it really make any difference?
Well, I think that, you know, because they major the ranking on 5 core pillars, which is internet quality, internet affordability, security, infrastructure, and, you know, governance. And so you can see some, you know, changes in some of these places. There's like an up and down. So while there's improvement in, say, governance, there is issue with internet quality, and, you know, internet affordability is also like down. So it's just that kind of like change of position as regards to their position, their performance, you know, on the core pillars that Surfshark used to bring about the index. So that's basically the change that we could say counts, you know, when the report says they have dropped by like 2 places.
Does it tell us anything about the well-being of Nigerians? I mean, they say it's the quality of digital life.
Yeah, so if you look at internet quality, they are talking about the fact that internet quality in Nigeria is still slow. And then you look at affordability, they also say that internet affordability, internet is still not affordable in Nigeria. And I mean, if you try to look at it, let's just go back to our news reporting in the past. We've seen issues around, internet depletion. We've seen telco communication companies say we are going to, increase the cost of internet because of challenges of running challenges around running these companies from cost of diesel. So that has affected the affordability and the quality as well. There's conversation about the internet depletion, which the NCC has been working with telco companies to see how that can be fixed. And like a few months ago, I was working on a report, regarding the Galaxy Backbone project, which took me to a village in Plateau State, somewhere called Vom. And basically, I was trying to look at how, agency banking is thriving in this community based on internet quality improvement. So why there's improvement? I mean, this is a global ranking that works with 121 countries globally. And so when that comparison goes globally, although we are seeing improvements on the grassroots, there is still, room for more improvement when you go on like a global scale. So that's how it affects the well-being of people using the internet. And I mean, like the spokespersons, Gabriel said, it affects everything we do. This conversation we are having, we need the internet, right? So we need quality internet, we need affordable internet to be able to access some of these things. So you hear that a telco rolls out 5G internet, and then, or you hear conversation about even financial inclusion, trying to bank the unbanked people in rural communities. If internet is not affordable, if there's no quality internet in these communities, it affects the well-being, of the Nigerian on the street that is trying to use its transaction. And then we have had, when the whole demonetization policy came on board, you could see issues around people having transactions failure because of internet. So in summary, that's how it affects, the people in some ways. So when you talk about like their digital quality of life, their well-being, that's how it affects them.
So when we say that Nigeria performed best in internet quality, claiming the 62nd place, does it indicate that our infrastructure challenges, at least when it has to do with internet penetration, does it mean we're handling it right?
Yes, so like I mentioned the Galaxy Backbone project that I was covering. That is an awesome initiative trying to push. I know they've done like the first phase of the project. The NCC at the time, I think 2 years ago, said they were like 98%, done with the second phase of the project, which is covering most of the northern region, which is what I actually covered. And so when you go to these communities, like conversation I was having with small traders, people that use SMEs in these communities, in Vaughan community particularly. And so in my conversation with them, I realized that, some of the things they could not do previously, they are now able to do because, the infrastructure is now being accessible to them. But then on the other hand, while there's improvement, there is also, failure of some of the projects like the rural telephony project, which a colleague also worked on, in communities in rural Abuja, for instance, where people are still having challenges when it comes to using the internet, when it comes to having quality internet, right? So while there's improvement, there is still more room for improvement. There is still more room to ensure that the broadband penetration, of course, there's been like improvement on the broadband penetration as it was like 2 years ago. I think as at the time I was doing the report, it was close to like 45%. And the government, the former digital economy minister, talks about Nigeria having a target of reaching 90 broadband penetration. And so why the government is trying to create those kind of initiatives that enables this, there is still room to do more, especially in rural communities when we jump into conversations like financial inclusion.
And then Affordability, obviously, I saw a part of the report that said a Nigerian will have to work about 2 or 3 hours to be able to afford, you know, internet and all of that. I guess we should just celebrate the fact that the quality has improved and know that we have to pay for it, you know. But how do you think that these costs can be reduced? I know that, I mean, when you have a lot of supply, then you can obviously bring down the price, but that seems like a long-term vision.
Well, I think improvement of the cost is like a larger conversation that has to do with the key stakeholders, which is like the government and, you know, the operators. And I mean, it's an ongoing conversation that they've been having. You know, they've had issues where the telco companies are saying, we want to increase our prices. The government is saying you should not increase it. But basically, it goes down to the economy generally. So what are the challenges these people are facing? They need money to run diesel, to run their data, to run their, you know, data centers, and, you know, what powers the internet that the common man uses. So once the prices for the resources they need to run those things are on the increase, then we have to bear the cost. So I mean, that's a broader conversation that, you know, has to do more with what the government and the operators are able to do as regards to ensuring that cost of running the business, you know, is reduced. And then that once that is reduced, it's definitely going to impact on the affordability generally. So now we talk about people working for 2 hours, 49 minutes and 15 seconds a month to be able to afford mobile internet. And you could see that if you use internet yourself, you could see that the cost you were buying it maybe a year ago, it's not the same. And then there is still the conversation of internet depletion, where even though you are using a lot of money to buy it, there is still that challenge where the internet, people are complaining that it's not lasting as it used to be. So it's just a broader conversation that the regulator and the operators have to like sit together as they've been doing, you know, to find proper solutions to.
Yeah, but I mean, from what you've said, it sounds like a long one. But I think the worst that's in the ranking for Nigeria is the EGovernment, being 88 out of 121. That's very close to the bottom. But we've heard government talk a whole lot about the ease of doing business, the Corporate Affairs Commission, CAC, they say that in 24 hours you can register your business and it's all virtual. You know, some state governments have tried to bring the issue of registering your land, you know, virtual. All of this should feed into e-governance, but we're doing really bad at 88th position.
I mean, so it goes to the first question is, who are the 112 countries or 121 countries that are on the ranking? These are more developed countries. They are just a little about 25 African countries represented on the index. So when you look at, it's like comparing the little effort you are making to, you know, more global leaders in the ICT sector. And so although it might look like effort, like I said earlier, it might look like we are doing well locally, when they take us on the global standard, you could see that there are some issues, right? So a few weeks ago, I did a reporting on, you know, African countries' readiness when it comes to like artificial intelligence. And African countries are still lagging behind, and Nigeria is one of them. So we can see that now the Minister of Communications, Innovation and Digital Economy is trying to rally around to come together and bring an AI policy that helps that, you know, this AI policy, in fact, is what made the country that topped on that particular AI index stand out. So when they work together to like bring together these policies, and, you know, it doesn't stop at bringing the policy, it goes to implementation. So we have been having that conversation with the Nigerian Startup Act as well. The Startup Act has been signed, but how far has the adoption or implementation been so far? We've heard state governments say we are going to implement it. So far, we've had Kaduna, we have Lagos, we have even Plateau State, you know, having conversation around implementation. So sometimes when the policy documentations are done, there is still need to monitor. So we are seeing that data protection, for instance, which is another key point that Shopsharks use in their ranking, we are seeing that the government recently inaugurated a committee which job is to look at, ensuring the implementation of all of these things that are on paper. So there's a lot of work to do when from paper, there should be a transition into like implementing, to ensuring that all of these conversations that were done, all of the town hall meetings that were held are actually being reflected, in the way that transactions are being done, that, government, in the way government is running its businesses. And so they see a challenge when it comes to like implementation after the paperwork is done, and we could see that with the Nigerian Startup Act, for instance. So.
Yeah, so I guess all of this, we have a beautiful policy on paper, but implementation, that's why Kenya, we're a big brother of Africa, yet Kenya has overtaken us by two places. And we see that country, doing really well when it comes to the use of electronic transactions and all of that. Perhaps Nigeria needs to put its eye that way and get one or two lessons from them.
Yeah, and I mean, the reference you made to Kenya, and it's just, they recently had like an e-mobility policy, and we can see that actually Kenya is doing a lot when it comes to like e-mobility. Uber recently launched like an EV, like an electric vehicle in the community. We also like had another tech company recently that launched, and we have companies that are coming up in that sector. So what the instance I'm just trying to make is Kenya is saying we want to push e-mobility. We have this target at this year, and you can practically see that as it's being done in their country. So when you talk about, when you set those goals, it's very important to go back and start implementing, doing the hard work. So it's good on paper, but it has to reflect in the way that the people are living. So that's very important. I feel like, now there's been a transition in government. There's been like, a new minister who has worked in the tech ecosystem, who has, led businesses and worked with other businesses, who is like experienced, when it comes to running businesses and the challenges businesses have faced when it comes to like ICT. So I'm hoping to like see those conversations. We've been seeing him talk about it in his recent trip to India, and now at the UN General Assembly, we are still seeing him have those conversations with investors, trying to see how, they can be that improvement, trying to also go down to even technical talents, because there've been this exodus of talents leaving the country, and it's important that, we still have people in the country who are skilled enough to help implement these policies, to help build these technologies. So it's still very early, just over 100 days, and so we are still trying to pay attention and watch carefully, how the current administration tries to like put to work some of these things that are already on paper.
Yeah, well, of course, a lot of us are also watching, and high expectations there from the Minister of Digital Economy. But, I mean, the Deputy Secretary Treasury, Mr. Wale Adeyemi, was in the country, from the United States, was in the country, and one of the places he visited before he left was, Ikeja Computer Village. Seems a whole lot of talent there, and he did talk about, them investing in companies. What features do you think would make a startup, to be that attractive, or give the security that an investor needs, to attract funds and to sustain it and grow those funds, to grow above being a startup?
I mean, so most importantly, we've already had this conversation in the few minutes we've been talking, and most importantly, the government creating like an enabling environment. This involves like, regulations, this involves provision of infrastructure. And so when it goes back to the innovator, it goes to them, thinking out ideas that are relevant, that are solving real life problems for, the people in the environment. So what solutions are you building? Are you building like a fintech solution? How relatable is it to the person on the street? How useful is it? Because, the conversation that people have been having lately is that probably you are building a product that is not so relevant to a lot of people. So there should be that room of, them building products that are relevant to people in the community. And because that is the market, right? So if you are building what is relevant that people need, they will definitely want to use it, and that will definitely bring returns to whoever has invested. So, the innovators rather thinking about ideas, and we can already see a lot of companies in the country a lot of tech companies in the country that have done a lot of things when it comes to like education, healthcare, and financial services especially. So take for instance, ULesson, an edtech company based in Abuja, was formerly based in Jos, is able to transition from just providing education for people in elementary schools to secondary schools, and they recently got a license from the NUC to provide a degree, to build a degree awarding institution. And so when that shows their relevance, and I mean they recently raised a lot of money as well to help them double down on what they are building. And we are also seeing, although there is like an economic downturn where there's less money coming into the ecosystem, but we are still seeing people raise money. Why? Because like we had conversation with an investor some time ago, and he said, no matter the economic downturn, people are still going to raise money if they are building what is relevant to their communities. And immediately they are building what is relevant to their communities. It means people are going to use it, people are going to pay for it. And we could also see the conversation about relevance when the demonetization policy came on board. We could see that people had to, some popular names in the fintech industry popped up because their relevance was tested at that point, and people actually had to leverage it for their transactions, say businesses. And in this community where I was, for instance, you could see that a lot of people probably using POS machines by money points and some of these Nigerian-born ideas. So just building what is relevant is the very key point, very starting point. And also there's a place for accountability. And so there have been a lot of conversation about, founders' accountability, ensuring that you are using the money you have gotten the right way. And so I feel like when you get the money, you are building what is right, you are also being accountable to people. Sometimes we focus conversation about accountability on the government, and so there's little or no focus on the private sector. But I mean, when these innovators build these solutions and get money from investors, they should also be accountable to the monies that they have been given. So that will also like help. Once there's accountability, there's transparency. Somebody, even by word of mouth, somebody says, I invested in a Nigerian company, and the founder I worked with did great when it came to like investors updates, when it came to like accountability as to what he was doing, the challenges he was facing. Someone else would be interested to come. But I mean, when we are not able to drive that narrative of accountability, some people will just be scared of bringing, money to where we are, especially because of the already bad name when it comes to like cyber crime that we have in the global space.
Yeah, well, a whole lot there, but I guess all of this will help us to fulfill that mandate of Africa's solution to the world. I think that's the latest one there now that is out there, Africa's solution to the world, not just for African problems, but also for solving challenges out there. But we do hope to get there because we've got what it takes. We just need to get it out there.
Yeah, just to add, I mean, we are seeing African companies expand into other regions. Just a few weeks ago, Flutterwave expanded into India. So we are seeing those Asian and European expansion.
So truly, it's Africa's solutions to the world.
Yeah. So we are seeing that, and it's what I said about relevance. Once it's relevant, you are going to see people are going to call out to you, to bring those solutions to them so that they can leverage as well. So we can see companies like Flutterwave move out outside of Africa, go to Asia, go to Europe, and many other African countries as well doing some of these things. So I mean, if we keep the pace, as to building what is relevant to our community, leveraging our solutions. I was watching an interview, I can't remember who, but
all right, Johnson. All right, Johnson, we really have to go. Thank you so much, Johnson. Pilaka is a tech and media analyst, obviously a passionate a stakeholder when it comes to the ICT sector. Thank you for sharing your perspective with us this morning.
Thank you for having me.
So it's time for the markets now. Anetie comes in, and Anetie, I don't think we can have enough of President Tinubu ringing the bell at NASDAQ. I think he's still making the news up to yesterday. The first African leader to ring the bell at NASDAQ. We know that former president did ring the bell at the New York Stock Exchange, but he is the first at NASDAQ, and I guess that's, I mean, it's not all bad news from Nigeria.
Well, it's not all bad news, particularly when you look at Nigeria as the giant of Africa in terms of GDP, in terms of the
Big
population.
Brother
Yeah, big brother Africa. So, and when you mentioned Nigeria's president ringing the closing bell at NASDAQ, it's very, very significant because it's coming the very first time in 10 years, although he may be the first African to ring the bell at NASDAQ, but not really for Wall Street. So, but overall, Nigeria has made that landmark by being the first to ring the closing bell on NASDAQ.
On Wall Street. And another thing is I don't know if you followed his speech and all of that on the floor of ONGA, and he did not really just speak for Nigeria, which, was a very touching one. He spoke for Africa. And one of the things that I think stands out from what he has said so far is that Africa doesn't want to be pitied. We want to be partners. So we're tired of, we need aid, we want to borrow. Partner with us. Let's get our resources, add value, and then get our well-deserved revenue. We don't always want to be at the begging end or just at the receiving end. We can do it. So, I think it depends on Africans, actually.
Yeah, I think you have a point there, because Africa is richly blessed when you talk about natural resources.
Natural and human resources.
Human resources, even the weather, the weather is quite, when you look at other parts of the country, other parts of the world, we've been having so many natural disasters, but you rarely see such, maybe just for the likes of droughts and sometimes floods, but not when you compare to the global scene. But let's talk more about the market.
The market, yeah.
So, and we're starting first with the fixed income markets, which is another bearish sentiment there, a second day. So far, the fixed income market has been bearish, and we'll be talking to our guest, fixed income analyst, to give us more details about that. But take a look at your board there. There was some profit-taking activities on the 35 days to maturity paper, but look at your board there. For the bonds market, 21st of June 2053 paper, it was had the highest attraction, 10 deals. When you look at the 22nd of January 2026 paper, it had 6 deals. So 6 deals a piece for the 22nd of January 2026 paper, as well as the 18th of April 2037 paper. Total number 29. Let's move over to the other side of the market. Treasury bills market, another bearish sentiment there. You see another round of profit taking. At the same time, our investors really, is their appetite waning? We don't really know about that, but we'll be getting more of that details. For the OMO market, average yield is still unchanged at 13.4%. So for that market, so now, but to have a bigger picture of the fixed income market, and then, of course, what to expect, let's talk to Caleb Alimi, Chief Dealer at Providence Bank, for more details on that. Thank you for joining us, Caleb.
Thank you, Alexei. Good morning.
Yeah. Okay, so Caleb, I have 4 questions for you, but I think let's trim it down to about 2. Now, is there a perceived waning appetite for fixed income instrument by investors, because it's been largely bearish throughout the month of September, and next week we'll be counting down to the end of September. So, can you bring us up to details on this?
All right, so the month of September has been a rather interesting one. We've had a sort of liquidity squeeze at the interbank market, and that's why you've seen the bearish sentiments persist. The banks have been, struggling to fund their books, largely from the CBN window, and that's why you see that a lot of banks have been selling treasury bills, and the yields have sort of like inched up at the secondary market. At the primary market we also saw that impact for the 2 auctions that happened in the month. The first one, the 1-year paper closed at 12.55, and the second one, it closed at about 12.98. So that, liquidity squeeze has been what has largely controlled or, dictated market sentiment. Going into the final week, we expect FAC to meet sometime next week. And so with inflow of FAC, we may begin to see appetite for treasury bills, at least at the short end of the yield curve. So we could see some demand for the 1-year treasury bill once FAC comes in. Interestingly, market liquidity has sort of eased in the last 2 days, given the funds inflow from SureP, subsidy reinvestment program, came in about 2 days ago. That slightly improved liquidity, even though there's still that angst in the market. We expect it to ease from next week, like I said, when the FAC allocations come in. So we'll see, the banks come and play more in that space. Banks are the largest holders of these treasury bills, really. So they're the ones that determine, how the market swings.
Okay, so now that brings me to my second question. Yesterday we got that news. We were all expecting that the Central Bank's Monetary Policy Committee will be meeting on Monday, but now there's a postponement, which a new date has not been announced. So how is this impacting on the fixed income market? Because we, of course, were expecting, but when you look at the Naira has been on the decline, and then, of course, the inflation figure. So how is this impacting the markets?
So interestingly, some sections of the market expected the meeting to be postponed, given the overhaul going on at CBN. So it wasn't largely a surprise. That's one. Secondly, market has priced in sort of like a 50 basis point hike, given the way inflation is galloping. So a lot of us are expecting a 50 basis point hike whenever the meeting holds. Thirdly, speaking about FX, I think what market is looking forward to is some sort of clarity around what the mission and the objectives or the vision of the new CBN governor and his management team will be. That would give a lot of clarity. So currently there's a bit of uncertainty in the market, and that's affecting trading volumes, and that's also probably affecting FX as well. But thankfully, the CBN intervened in the market for FX yesterday, and it sold at about 737 levels. So we expect that to also continue going into the coming week as there's more clarity around the leadership of the CBN.
Quite interesting. So, Caleb, I think we'll leave it there and head to other markets as we continue to focus on markets in Nigeria. Thank you so much for your analysis. So, that was Caleb. Yeah, that was Caleb Alimi, Chief Dealer at Providence Bank, giving us details about the fixed income market. Now, it's 2 steps forward and 2 steps backwards for the Nigerian stock market. We had another pullback. Actually, we had a 0.09% pullback, and then in terms of Naira loss, we had about 35 billion Naira pullback on that market. So, and that was no thanks to MTN share price, which retracted by about 0.4%. Although when you look at your board there, we had the sectoral performance being in mostly in the green, but that's just for the markets. It's just profit taking, not any other factor.
Yeah, and I mean the drop is marginal. 2 days ago it was 0.03. Yesterday it was 0.09. So I guess it's just a normal market cycle. I mean, not when our president has rung the bell. And that's that.
It's actually when you put your money where your mouth is. So when there's profits, you kind of take it to make settlements for your needs.
Yeah,
and
we will say it's school fees.
Yeah.
We will say it's for school fees, but thank you so much, Anete, for giving us details of the market. It's time to move to the next market, and that's the crypto market. And one thing that is making the rounds today, talking about crypto, is the NFTs. Arts is now in the financial space and making a lot of money. Anyway, before we go into the NFC, let's see the price. It's a very red board. If we could have that board there, a very red one that we have this Friday morning. Looking at the board, Bitcoin is down more than 1%. Almost 1.5% right there, and it's $26,644.20. That's what Bitcoin is at this morning, and the dominance is still almost half of the market. But, well, we could do much better than this. Ethereum is also down 1.79% at $1,593.33. And when we look at, general sentiment in the market, we can see it's more of red. So let's see the index. I guess that will put those pictures, capture them in numbers. If we can have the fear, greed index to see where we are at this morning. Doesn't look, okay, there you go. This is the stock market. There you have it. The fear index is obviously a fearful market. Investors are afraid and would not want to get into this market now. And we've had this for a bit, as we know. So 43 less than half. I guess it's the sentiment it's been for a while now. Looking at the prices, we see that drop we saw in Bitcoin. It's down about 1.5%. Ethereum is also down 1.79%. BNB is down. Cardano also down. And then our precious XRP that has been very busy, either up or down, is also down almost 0.5%. Let's see the next top gainers. There you have it. Look, when you look at the numbers there, you know the market is not in a very good place. Mostly Fridays, but I mean, I thought we had overcome that. The only one that looks attractive is there, just about 9%, and LTC 0. You know, mostly when you don't see the double-digit gains, you know that the market is in a very fearful mood. Let's see the top losers. There you have it. This is where the numbers are, from 8% to 7% to 5%, and then almost 5%. But as I said earlier, what we really have in the news this morning is talking about art in the financial space, the NFTs, and this report that says that about 95% of NFT are now worthless. That's heartbreaking for investors in that area. But let's hear what Michael Naji, joining us from New York, can say about this. Hi, Michael. Good morning.
Good morning. Good morning,
yeah, before we go into the NFTs and all that, I mean, your city is hosting the world at this time. Are you part of it? Do you feel the vibes?
No. No.
You just face your crypto. That's your business.
Exactly. My only concern is basically crypto, to be honest.
All right. Okay. So NFTs, this report, should we take it seriously? What should we be doing now?
Basically, the reason why NFTs are down over 90% is because NFTs are historically tied, crypto in general is historically tied with easy money and interest rates being so low. And so ever since we've seen this interest rate hike, we've seen basically a lot of liquidity dry up in all cryptocurrency products, including NFTs. We see volumes, like you said, down 95%. And we've seen the trading volumes are down 95%. The sales figures are down 60, 70%. And then when you look at the floor prices for blue chip NFTs like Bored Ape, CryptoPunks, they're at more than 2-year lows. And like I said, this is just a function of easy money drying up. You know, by all means, it doesn't mean they're necessarily dead. It just means that the easy liquidity conditions that existed before for a lot of these NFTs are not there anymore. And it doesn't mean they're necessarily dead, but you're going to see things like blue chips like Pudgy Penguins, CryptoPunks, you know, things that are there that have staying power. You will see them come back in the next cycle. But unfortunately, like every cycle in crypto, you have basically your failures. And so you're going to see a bunch of those projects not make it to the next cycle. Unfortunately, 90%, 95% of things in crypto fail. And it's the 5-10% that actually makes the shift, that actually makes the turn to actually create some kind of technological change.
So what happens to investors in those projects that you said may not be able to make it to the right cycle? What can they do? Can they at least minimize the loss?
The problem is because the volumes are down so much, these people can't even exit some of these positions. So let's say someone bought an NFT for, I don't know, 10 ETH. A lot of the time, the problem is now the liquidity on those projects are maybe like 0.3, 0.5. They're basically taking a 95% loss in order to exit the position. So a lot of the times, you know, people just hold on because it's just more painful to lose and then actually, you know, take on, then actually exit the investment. So a lot of projects too don't even have the volume for people to exit. So while you can get out of a lot you can't even get out of. There's not enough volume. There's not enough volume to support it. We've seen attempts at creating automated market making for NFTs with projects like Blur, where there was some kind of liquidity mining to help people with the same issue. But there's just simply not enough liquidity in the system to allow NFTs to have the same dominance that they had before. So the best course of action, if anyone is in a illiquid NFT, is just to sit and wait. If you're in a blue chip project, you don't really have much to worry about. Your project will, whenever the easy money spigot resumes, your project will be fine. But unfortunately, those who have lost are going to have to eat that loss and just stay in there.
Wow, that's sad. That's sad. But I guess, I mean, it's
that's
the
the
risk.
nature of the game.
Exactly. It's the risk of investment. You can win and smile to the bank, or you can lose and cry to the bank. Well, thank you so much, Michael Naji, for sharing your perspective with us this morning.
Thank you so much, Amy.
You should try to go to Onga and see the world leaders there. It's your city.
I will do that. Thank you for letting me know. So many things happen in New York City. Half the time I don't know.
All right, Michael. Thank you so much. And so that's
my pleasure, bro.
Yeah, that's it on the program today. And I hope it's been worth your while. 55 minutes of current and relevant business conversations, adding value to your day and your economic decisions. I'll be back at 1:30 for Business Incorporated. By then, we'll have updates from the world of business. I'm Ini John Mekwa.